Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the data is in. The economy has reached stall speed. It's going to get really bumpy, so let's dive in.
Trade Genius.
So Bob, this survey comes in from the S&P Global, and it's talking about how, we've really just fallen off a cliff here. And go over to the slide here. Business activity approached stagnation point in August with growth its weakest since February as demand for new businesses in the vast service sector contracted. And, in our economy, it's all about the service sector. That's what, the rich spend their money on services. S&P Global says flash US Composite PMI Index, which tracks manufacturing and service sectors, fell to a reading of 50.4 in August from 52 in July. Biggest drop since November 2022. And obviously that was when the markets were much, much, much lower. While August reading was the 7th straight month of growth, it was only fractionally above the 50 level, separating expansion and contraction as demand weakened for both manufactured goods and services. So while we got everybody high on the kite on AI over here, the economy looking the other way is basically rolling over.
Yeah, and just for people to, Phil and we're filming this podcast before Jackson Hole, so we have kind of no insight on that. So this is a purely macro conversation. Is that yesterday we talked about prices that are sticky, and now we're looking at demand that is sticky on the low side too. The manufacturing PMI is dumping. We talked about Christmas is going to probably be horrific. When we talk about services, there's what's called necessary services, like you need a plumber, right? You need a doctor. But then there's all these other services out there like travel, going to get your nails done, going golfing, stuff like that people are going to say, you know what, I can't do it. I can't go. I don't have the money. And that is a significant portion of our economy. And it is a huge employer. And I think we're going to go from sticky to dump. And it's going to come fast. And you can see companies already, man, they're looking for every way to cut people. We talked about this before, but every fast food company is liable to completely get rid of their registers. And some of them are going to go strictly to a digital format where, you're not even going to be able to get into the building. So the buildings are going to shrink their footprints, Phil. And you're just going to go up and pick your order up because you ordered it online. So it's going to be absolutely insane, the amount of employment that's going to disappear over the next 2 years that will never come back. Right. And that's one thing that it bothers me personally, because everybody's looking for, and we're going to kind of do our pop here. I think this is going to be an L-shaped recession, and I think it's going to be brutal.
Yeah, and you have the manufacturing PMI, which is just cratering. I think the important thing to look there is that how it compares to 2016, 2017, 2018. Those 3 years until the end of 2018 where it started to roll over, that run there, the economy was actually doing pretty good. The Fed wasn't really manipulating anything. And as far as the Fed balance sheet was drawing down, it wasn't really having, really negative effects on the economy. But if you look now, and again, the 50 level is the line in the sand from expansion to contraction, right? And recessions are all about contraction. Compared to where we are now, losing the lows of that time period, I think it should jump out at you and scare you a little bit here as far as the economy. And then if you look at new orders as well, new orders, same thing. So you've got manufacturing output contracting, new orders, which is forward looking, is contracting as well. So this is why we kept saying that the second half of this year is going to be rocky. The markets have already started off showing you that is being confirmed. And then the forward looking stuff from the surveys and PMI data is telling you exactly that, Q4, and that, Q4 is the quarter that we're really saying, you got to brace for this thing to roll over, because I think it's going to confirm that the highs are in as a lower high here. Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. So we know all that's coming, obviously, from the data. What do you do? Well, personally, for me, I think that things like gold and Bitcoin, I think they're going to come down as the markets rotate lower. They won't fare as badly. So in other words, markets will make lower lows, and I think that gold will probably make higher lows. It'll still come down, but it's not going to do as badly. Bitcoin, if it does start to mimic gold, will have like the same outcome. Bitcoin has that halving cycle that it's in. So, there are some bullish forces the closer we get to second quarter of next year with that. I think the play that for most people to guard their portfolios is going to be TLT, Bob. And, I know you have your opinion on what to do here, but I think simply speaking, I think if you start layering into TLT, especially as we progress through the next couple of months, then you're gonna have a decent position, and then your confirmation is going to be when equities and bonds decouple. I think that's where that you're going to have probably a 6 to 8 month run in TLT where the safety trade, always the safety trade, right, is flocking to bonds as equities take a bath.
Yeah, absolutely right. So our view is you go from energy to bonds to gold. So I think that's going to be the trade. I think we're going to mimic what we've seen in the 70s. We're going to mimic what we've seen at the last half of 2008 into 2009. Just remember 2008 when we had a credit event, TLT doubled. Okay. Yeah. I'm happy to buy $100,000 worth of TLT and have it double on me and sit back and not have to panic over every wiggle in the market. So,
right.
I think that's what people need to start thinking about. I would, if it's going to take you a while to add a position, then I would start layering in after the first of the year. After the first of the month of September. And then if Powell starts talking, another hold, then I think you got 2 holds in a row. And then I think you can start taking a position in it. So, like I said, on Saturday, I think, Phil, I want to talk about the auto markets because that's another Enfuego disaster right now. If you want to buy a car, wait 6 months. We'll talk about that on Saturday.
Yeah, sounds good, Bob. I agree. All right, guys. Well, thanks for watching this video. Let us know your thoughts. Do you think the economy is stalling? What are you seeing in your neck of the woods? It doesn't all happen at once, so we're curious to hear how different parts of the country are doing at this point in time. Let us know if you think that this is going to manifest over the next 6 to 12 months. All right, guys, that's going to do it for this video. Thanks for watching. Please hit like and subscribe. Also, check out our specials over at tradegenius.co, and we'll see you on the next video. Take care. Bye-bye.
Trade Genius.